Hello, everyone. Welcome, welcome, welcome. We are really happy that you are all here. It's a very interesting day today because we have an election going on and we have people who are running for office here. And we have our amazing Dylan Clark, who knows everything there is to know about. Oh, I forgot the word. What are we talking about, Dylan?
I think it's compliance today.
Compliance.
And I do not know everything. Please consult your own attorneys.
Exactly. But he does know about compliance for being an accredited investor or a non-accredited investor and the things that you need to do. And so we're going to get a little lesson about how, what needs to be done through the compliance subject. I don't even know how to discuss it, frankly. I just find it's very challenging to know as much as Dylan knows. He's an incredible person who's got a mind that works like nobody else's. And it seems to be a sponge and just collects information. So now he's going to squeeze that sponge out and give some of that to us. So take it away, Dylan. Thanks for coming on.
Hey, thanks for having me, Peggy. I know this whole thing kind of got brought up over 506Bs a while back, so that's what I'm going to kind of stick to is that 506B space because that's where I also notice a lot of people get into trouble at. Funny enough, I actually just got an email the other day from someone I don't even know about a 506B offering telling me that I should invest with them and laying it out. So that was fun to see. But the first thing that needs to kind of be discussed about it is figuring out the difference between accredited and non-accredited. So I'm going to talk about the accredited. Non-accredited is everything that falls below it, not above it. An accredited investor, there's two tests that we can do to figure out that. And that's going to be either a income test or a net worth test. The income test is going to be, you have to earn $200,000 or more every year for the past 2 years and expect to earn at least that much this year. So say someone in 2020 and 2021 made the $200,000, but this year in 2022, they got a pay cut or they lost their job, whatever it may be, and they're only going to bring home $100,000 this year. They now can no longer be claimed as an accredited investor per income requirement. That's for single. If you are married, you would qualify $300,000 or greater. And then the same 2 years plus current year rules do apply. The other one is the net worth test, and that one's going to be the one that most people certify under, and that's going to be your net worth is to exceed $1 million without including your primary residence. So if you have a $1.25 million net worth, but your home is $1 million, you're not accredited. Cannot include the primary residence. You don't have to include the mortgage in that either, except if you are underwater on the home. So those are the kind of two ways to do that test. Now, back to the 506B thing. For this does qualify for everyone, whether they are accredited or non-accredited. Non-accredited are a bit trickier, but the one thing that people don't really do is create the prior substantive relationship. The key word in that's prior, and then there is the substantive part. So the SEC issues interpretive letters in response to questions from issuers or people offering privatized securities. Those are called no action letters. You can find them all publicly on the SEC's website. The main one that people look at whenever we're talking post-Jobs Act of 506B compliance is the no action letter by Citizen VC. Now, unfortunately, they didn't give too much clarity on what you can and can't do, and that's kind of the problem with understanding compliance in this space, because there is no direction on what you can do in the space. Now, they do define what a general solicitation is, and that's going to really depend which regulatory pathway a company chooses to raise capital. The company may or may not be limited in how it can connect with potential investors. So I know the most example is the 506B, which does go ahead and prohibit the use of general solicitation to market the security. So that's going to be a newspaper and magazine, unrestricted public websites, television and radio broadcasts, and even seminars. Seminars, whether they be virtual or in person, will count as a journal solicitation. The only thing that doesn't when it comes to seminars are demo days. That was a rule that was changed. I don't believe it was that long ago, but it clarified how companies can pitch to potential investors, and you have to kind of qualify it for the demo day. So like the sponsor of the event is going to have to be a college, university, state or local government, or nonprofit organization. I believe angel investor groups fall under that as well. The sponsor is limited in its role outside of serving as the event host, so they can only host it. They can't do much else. The advertising still of the event doesn't reference any particular securities offering. So say you got a sponsor from your local college to host the event for you. They could go out and sponsor, and advertise a night of financial literacy or whatever it may be. As long as they don't say anything in reference to the particular securities offering in their advertisement, you're good to go. And then the information during the event is going to have to be limited to notification of planned or ongoing offerings, and then the type and amount of security offerings being offered, intended use of proceeds, and the unsubscribed amount. So there's some other kind of things that you have to do in the background. As far as non-accredited, checking for sophistication to get them up to there, I would have your lawyer, whatever attorney you're using, draft up some sort of non-accredited investor acknowledgeable agreement, and it's going to be self-filled out, which is okay in a 506B anyways, because you don't need to pull tax returns, you don't have to do your own checks. However, if say it's your best friend and they're not accredited and they still certify saying that they are, you can be in trouble. You'll be in big trouble if that comes up. So that needs to be done. Some questions you can ask for that. You need to know their names and who they are, the nature of their business, whether they own one or they work at one, what their position and duties are. So, the level of sophistication is going to be a lot different, say a science teacher versus an accountant. You just need to know that. Understanding the anticipated retirement age of that person, getting a list of investments that they've made. It doesn't have to be super detailed. You don't need their entire investment history if they're trading equities day in, day out for the last 5 years. But, do they have an IRA? Do they have a 401k? How much is in each? What is their risk tolerance inside of those? What are the equities that they're invested in? Do they have any real estate investments? Do they have, how many properties do they have? Yada, yada, yada. And then of course the incomes, net worth, the investment percentage that they're looking to put with you of their net worth. So if they're not accredited, so their net worth's below $1 million, if they have $500,000, they want to put $50,000 with you, that's 10% of their net worth. So you have to kind of be careful about how much of the net worth that they put in there. And the one we utilized for our non-accredited was $150,000 because we didn't want non-accredited, so we automatically kind of shifted them out just by making that requirement. And then there's some general disclosures and information that you need to put. I have a whole template that I can send out. It's not a problem for that. Now, with that, even though if you've done all of that, you can still fall short by when that relationship was created. You have to have a pre-existing relationship. So a pre-existing relationship is one that is formed before the start date of the offering or is established through a broker-dealer or investment advisor prior to that investment professional's participation in the offering. So if you want to bring a bunch of people on go find them before you start drafting docs. You need to have a pool of 1,000 people before you start drafting your 506B offering. If not, then you create the relationship after, you're screwed, unfortunately, if someone wants to come after you for it. You can do that either yourself. You can do it through a broker dealer or investment advisor. I know we offer that service through our firm as well to help aid in that. And then your due diligence has to be top notch. You need to know how to understand a individual investor's risk, their tolerance, what they can and can't do. So make sure you have a good team around you if you don't know how to do that as well. And then last but certainly not least, document everything. Always be recording. Always keep notes. Everything goes in a file. I would have it at least on 2 different hard drives as well.
Anything else we should know?
It's situational. So figure out what your attorney and lawyer will protect you from. So I mean, you can do all of those things, but if your attorney won't fight for you in court, then almost everything you've done is kind of useless in a way, because you need someone to represent you and hold that up in court. You don't want to self-represent in court.
Right.
So check with your attorneys, figure out what they will and won't cover you for, and do the best that you can do. You're going to mess up and that's okay. Just don't get caught.
Okay, great. And Julie, yay, has some questions. Are you ready for questions, Dylan?
Yep, go ahead. You're muted.
You're muted.
Guess I have to unmute. Can you hear me now?
We can.
Okay, great. So the first question I have is regarding the income test. With the 200,000 a year, past couple of years, and in the future, is that gross or net income?
Gross.
Gross income. Okay. So that could put a lot more people in, possibly. And then with what you're talking about, that is primarily for some kind of a fund you might be putting together, is it not? Does it apply also to single private lenders, individual private lenders?
Say that one more time.
That would be any 506B, right? That you just described.
Yeah, I mean, a private lender,
because a fund wouldn't be a 506B, right?
well, a fund can be 506B, 506C, 506C31, Reg A Tier 1, Reg A Tier 2. There's several types of funds. The ones that we're covering here are 506B. So as far as it being a lending platform, I don't know of any lending platform that has to take into account whether someone's accredited or not.
When you say lending platform, what are you referring to? What do you mean?
Well, you were talking about lending.
Right. Like being a private lender, as opposed to, this is more investing into a fund of some kind, right? Or
Right. So,
No,
I mean, a lender's lending.
A lender's lending.
They're not investing.
So you're talking about this, and that's the distinction you're making. Okay.
Yeah,
Right,
absolutely.
a lender, so lending's completely different, and there's other people that'll be able to talk more in depth about that another time. But whenever it comes to lending, I mean, we give people who are $500,000 in debt with a 500 credit score loans. They're definitely not accredited. So,
And what about if they have a JV equity interest? Doesn't matter.
I mean, that's lending. That's a completely different thing. That's a whole different side of compliance and regulatory issues.
Okay.
No, I think Julie's talking about if they're in a like a LLC type, where they're instead of being an LLC, it's 2 people, for instance, that have gone out and bought a property together. They're joint ventures. They're own the property equally.
So companies are going to be a lot different. Generally, companies don't fall under accredited versus non-accredited. They fall under qualified purchasers. Qualified purchasers are going to be companies with 5 million or more. So
Okay.
once you attach it to an actual entity or corporation, that becomes a whole different set of tests, and that test is going to start at $5 million.
Okay. I think I missed in the introduction what firm you're with or what you do as far as investing or funds.
Oh yeah, I should have done that.
Yeah.
I'm an RIA and private wealth manager for Sabre Private Wealth Management, and then I am also the co-GP of Abundance Asset Management.
RA, registered advisor?
Registered investment advisor, yes.
RIA. No, I used to be one. I thought, and so you work with a broker dealer?
No, RIA firm.
Oh, okay. Gotcha. Thank you.
That's it.
There's
Julie, I
a
thought you
question
had a
that was in
dozen.
chat. Julie,
Okay.
did you have another question?
Me? No,
All
No.
right.
that was my two.
Angel had asked, once a fund hits 5 million, is it a 506c?
No, you don't have to switch registration of your fund ever, whether you have 5 million, 5 billion, 5 trillion. If your registration is set, your registration is set. The only thing that applies whenever it comes to what you have to do as far as AUM requirements is whether you're SEC registered or not.
What is an AUM requirement?
Assets under management.
Okay.
So if you go out and raise $100 million, you don't have to register with the SEC. But once you have $150 million or greater, you have to go and register with the SEC through an RIA firm. So someone on your team, or you can outsource it to someone like myself, my firm, who has a CRD number, who is registered as a securities advisor, has to go register your firm or your company with the SEC. So if you ever plan on having $150 million or more in your fund, if you want to keep it all in-house, someone's going to have to go take their Series 65 exam.
Oh,
Then
that's
we'll have a little
running the
problem.
fund? So the fund manager has to have that series?
Yep.
Oh, I wonder if they,
Once you're
Oh, that's
over
why they keep it-
150.
that's probably why they keep it at 100 million.
It could be.
What are the requirements where it's necessary to get a Series 65? Is it that 150 or are there other
That-
requirements too?
That's the only one that people generally pay attention to. Real estate is a bit different than, say, security. So our fund, we deal in security, so it's a little bit different. I'm still waiting for the SEC to make a change on this, but if you're charging a management fee to the fund, you're going to need a 65, bare minimum.
You charge a management fee.
So
Is it-
I'm waiting
is
for
it
the
that-
SEC to change the whole acquisition fee thing in real estate offerings to make them have 65s as well.
God, that would suck.
It's the same
Why?
thing.
It's not.
I think it's the same thing personally.
It's not.
I don't even understand why real estate is under SEC rules.
Because you're selling securities. I mean, so
No,
if
no, I'm
someone
not.
doesn't
I'm
have an
running a
active
real
role.
estate. I'm running a real estate. I am not in a stock or a bond. I am not running a business that has
Peggy,
real estate.
do you know what a REIT is?
I do know what a REIT is. It's a stock in
That's
a
a-
bunch
that's
of
a-
real estate.
That's a security of real estate.
Right, but I'm just running my own properties.
Are you having outside investors come invest in them?
Yeah, sure.
And you're taking out, so you're taking outside capital, pooling it together in a company, utilizing that capital to go out and invest in real estate.
And they're
So-
all partners. in
Yeah,
that.
but
all
real
are
estate is
partners.
collateralized though. It's not like a stock that can drop down because of
Right.
someone's,
Sure it
it's
can.
like a hard asset there. Like,
Absolutely not. Go talk to Bear Stearns in 2008. They held a bunch of real estate. They absolutely collapsed.
Well,
About
that's because
30
they
to
didn't know what the hell
50%.
they were doing.
All real estate dropped in 08.
Yep.
Didn't matter if you were a part of the CDO game or not. Everyone's real estate dropped.
The value drop based on something that doesn't matter with real estate as long as you have that income coming in. Somebody else set that valuation. But if you are getting your if you did not drop your, let's say, a rental multifamily, if you have a manufacturing business that's getting us 50 cents a square foot and it didn't drop, the value dropped because of some outside group that said the values of real estate have dropped. But if you really looked at how you value real estate, is always by the net operating income, and whether you choose to get a cap rate of 6, 8, 10, or whatever. And when you bring people in as your partner and they're all partners, they all understand that it's not a SEC. It doesn't have anything to do with SEC because they are all partners in the deal.
It does. So what is the exchange? So if someone wants to be a partner in your company, what's the exchange that goes on? What do they exchange to be a part of the company?
Well, one of them could be the property manager. Somebody could be the accountant on it.
Are they getting paid for that?
Of course.
So a security is a financial instrument, typically any financial asset that can be traded. So you're trading portions of the company for a service that's being provided. It's also a financial asset because it is holding a financial asset, aka real estate. So there's this whole exchange that's going on of shares of a company being traded in return for something else.
Yeah, the ownership of it and the value it's going to create for them over the lifetime of the holding of it.
Right, but it's still a security.
Okay, then let me ask you another question. You guys will love this one, all right? Why is the stock market called a security when there's no security in it?
Because a security is just the definition that's given to it. It's a definition of a financial asset or instrument that has value and can be bought, sold, or traded.
Okay.
I think Peggy was making a play on words.
No,
I
but
know.
I'm not. That's the only reason. That's the reason I never invested in the stock markets. There's no security. If I put $100,000 into the stock market and that drops down, I just lost my principal. If I put $100,000 into a piece of real estate and the value changes, my $100,000 is still in that piece of real estate because real estate always has a value. And that's why it's just my opinion. I don't like.
So I'm gonna strongly disagree with that, but that's so.
Oh,
if
but
I-
you're good at that part.
If I go invest in, say, Apple, there are tangible assets there. I just can't see them and I don't go visit them. I'm owning part of their real estate that they have. I'm part of Apple factories that they own. I'm getting part of the technology. I'm getting part of the processors. I'm getting part of every single phone that's out there. So there is tangible assets out there. You just can't touch them.
Well,
Like,
look at that.
it's the same way
What
with
if the company goes out of business? Like there's no value to the stock if there's no company.
it's the same
there's
thing
never
with real
zero
estate.
value.
I don't want to have this argument.
Oh.
No,
But it's the same
we're not
thing
trying
with
to
real
argue.
estate.
We're looking.
I
We're
understand.
looking at
You
the,
don't want to have this argument, but
It's
we
the-
do.
It's the same thing
Thank
with
you, Doug.
real estate. If all of your renters stop renting, if your city goes to zero, if you come to my city where it was 40 years ago and you're still holding now, you're underwater. Anything can happen at any moment in time. Property values can go down. People could leave the entirety of your city, a max exodus. There's no more renters. There's no more cash flow. Yada, 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 yada. So many things can happen. Any situation and scenario that you can apply to the Fortune 500 companies can happen to your real estate. You're not bulletproof. You're not invincible. So I don't know why we want to keep having this argument.
we just want to be able to see the differences.
We came here to talk about compliance.
Okay,
That's true.
Dylan, would you stipulate that the stock market is more subject to emotional swings than real estate valuation?
Yeah, because you're seeing the price value of it every single day. If you could see the price value of your home or your apartment building fluctuate every single day, real estate probably wouldn't be as invested in as it is currently.
Okay. But if I'm not an accredited, I didn't used to be an accredited investor, my husband and I, but we could invest in the stock market. We didn't have to be accredited. so I could buy any stock without having to meet that compliance.
Still can, 100,000,
That-
500,000, doesn't matter.
It's
Or
because,
20 bucks.
okay,
Maybe,
okay, if you
maybe
wanna
one
go,
way to think of
if-
the two different markets is simply to recognize that they have different levels of volatility. The stock market has a
Yeah.
much higher volatility than the real estate market. So you see much bigger swings up and down both directions in stocks and equities than you do in real estate. But I agree with Dylan that there's an underlying risk there that both assets can move up and down in value. It just happens that stocks volatility on a short-term basis, either intraday or weekly or monthly, is much higher. And because we see those in real time, it appears very risky. Whereas real estate assets have lower volatility. Over longer periods, they can rise and fall dramatically. But unless you're paying attention for those long time periods, you don't see it. So we don't, it's not a apples to apples comparison anyway, I think, from a time perspective.
yeah.
That's how I
Right,
think.
so why do they
Fair enough.
allow everyone to invest in stocks, but then they restrict you investing in real estate?
Exactly.
Okay,
That's a good
okay,
question.
okay. Go open up your brokerage account, if you have one, and go pick any company you want. And then try typing in your company. If your company appears, then we can have a whole different conversation about it. But if you're not listed on the public stock market exchange, then this conversation is pretty mute.
So what you're saying is,
You can buy any stock that you want anytime up, but if you're buying in
As
the
long as it's public.
Probably
So
different
we're having a debate here between public IPOs. Companies that have gone through IPOs that are listed on a public exchange versus privatized securities offering. That's
Right.
the debate we're having. If you go and buy a common share in Apple, that is a public equity that is IPO that has undergone so much scrutiny and due diligence through the SEC that it's deemed to be in there on the exchange, no questions asked. If
Got it.
something goes wrong, then they get pulled off. There's audited financials. There's always people checking on it. If you're an investor in Apple and you buy shares, you can actually call them up and ask for an instant balance sheet or cash flow statements any day of the week, and they have to send it to you. So if your investors call you up on Tuesday, all your investors call you up Tuesday, you're not legally obligated to do that. You could send them out quarterly, you could send them out annually, but even then you kind of don't really have to. So there's this whole, I don't know how this disconnect happened, but the difference between privatized and public securities is a whole different game.
And that's where these rules come in, is between the private and the public.
If you don't want to have to deal with these types of rules, then
You have to go through the
get a
IPO.
very large company, go IPO, spend millions of dollars a year of people and legal. But even then, you're not out of the woods, because it's going to continue to cost you millions upon millions of dollars a year, and legal fees and registration fees, all of these other things that go into being a publicly listed company. It's great, but there's pros and cons to everything. So you can either be a public company, shell out tens of millions of dollars a year in legal compliance, audits, all of these things, or you can be a privatized security and just play by the rules. And unfortunately, for people like us, we didn't do anything wrong, but there were people who did things wrong, and that's why the rules are now in place.
Thank you, Dylan. That was very nice explanation and very helpful.
Is
And
these are criminal or civil charges? Because Peggy and I are acquainted with somebody who pled guilty for several securities violations after being accused of stealing 9 million or so because of their investment that they got in private capital. And it was evidently only a civil case with a fine and no conviction criminally. So what's the distinction?
The State Securities Administration didn't want to get with the state prosecutor and pursue charges.
What do you mean?
If someone stole money and was it a securities offering?
Yeah, and it was the SEC that brought the case.
And then there was no, then that's that's up with the prosecutor who tried that case.
So it could be either one, because I don't want to get anything criminal or civil, mind you, but just.
If that guy didn't go to jail, that's a court ruling. The prosecutor may have not wanted to bring charges down. The judge may have not have agreed that the charges were sufficient to put him in jail, but they issued him to return all the money. But I don't know. That's a court thing.
Yeah, we have to look at what the court said.
I think it was only filed as civil, so that's.
Well, so then the SEC didn't file it. Well, I guess they could have. Are you sure the SEC filed it? Because generally the SEC doesn't file things like that.
Positive. I've got all the. court
Yeah,
stuff.
well, so then the SEC could have filed civilly because the SEC can't file criminal charges.
Oh,
So the SEC may have just fined him then. So they may not have wanted to pursue legal charges. So any state or federal securities administration can never come after you criminally. They could potentially come after you civilly. Since you're saying this, I guess the SEC can. I thought they had to go through a jurisdiction court system, but so they can only come at you civilly. The SEC can't prosecute criminal charges.
hmm.
I'm not sure if that's correct, Dylan.
They work with prosecutors in the court system to pursue, and they'll help the prosecutors and they'll provide information and they'll be all a part of it. But the Securities Administration itself cannot impose jail time. They can issue fines. They can issue, Douglas, help me out. What is it when you have to pay someone back for stealing? What is it called?
Restitution.
There we go. They can issue you maybe to pay restitution, but the SEC cannot put you in jail.
Yeah, I
The
don't know.
prosecutor can prosecute you. The judge can issue
Because
the
there was
order.
no individual that came forward to press charges. That's what I kind of wondered. You know,
That's very possible.
And again, they just might have elected not to charge it. They're, particular about what cases they take at the federal level
Hmm.
Like
I mean,
it's
this-
only $9 million. So
only.
only,
I mean,
right?
this
compared to
may
what
be
they
a,
see.
this may be a slight distinction, but earlier in my career, I worked at Enron, and several people violated Section 10B2 of the Securities and Exchange Act and were prosecuted for insider trading and went to jail. Now they violated the SEC's rules. I'm not sure whether the SEC is actually the body that prosecutes them, but they're the ones who set the rules, and people broke the rules and were punished for it. So that was a criminal
Right.
charge that resulted in criminal or in incarceration for those people.
Yeah, it did.
Right. So the SEC is an administrative regulatory agency. They don't have criminal prosecution powers. The SEC can and does bring criminal charges through the DOJ. That's how that's going to operate.
Oh,
So,
yeah.
so if, and that's the same thing on the state level that you'll understand. And if you ever go take the 65 is the State Securities Administration or the SEC, they can't charge you, but they're going to work with their best friend who sits across from them that works at the DOJ all together.
Okay.
Anything criminally charged is always going to run through the DOJ, but the SEC is going to be sitting in the next chair over to them while they do it.
Hmm.
Could you address sophisticated investors, please?
So sophistication, I don't even know if it's actually defined as far as a sophisticated investor. It's just a certain level of understanding. So it's all going to kind of tie in together with your accredited investor form. Like it's going to be someone who has a great deal of experience or knowledge in whatever is going on. So you kind of have to look at, what do they know? Are they a high net worth individual? Do they have significant market experience? So generally, if you're a sophisticated investor, you're going to meet the accredited requirements. You don't generally get to sophistication without being accredited.
Okay.
At least I've never seen it happen.
Okay.
Now, I will go back on that. Professional certifications do matter in that. So that's going to be like if they're a professor who teaches economics, but say they don't meet the net worth or income requirements for whatever reason, they're a sophisticated investor. They're a professor at a college who teaches economics. They have well-rounded understanding of what that is. So, or say it's a broker dealer who doesn't have $1 million net worth or make $200,000 a year. They're sophisticated. An RIA, they're sophisticated. Engineers, I believe, are counted as sophisticators. Lawyers are considered sophisticated as well, I believe. You can check that out on your own, though. I could be wrong on the last couple ones.
Wow. Thank you. And Cliff, you have a question?
Yes. So you said something when you were opening up and talking about compliance that kind of piqued my interest. You said, don't even start a 506B unless you have 1,000 investors lined up. So just a couple of real quick questions. So the first one, probably the most obvious, how do I get 1,000 investors? And then secondly, why did you suggest 1,000 investors?
How you do that? So here's the thing. If you don't have a fund and you don't have security, what's stopping you from generally soliciting things? Nothing. Go out and scream it from the rooftops. Now, I would still make sure that your lawyer's ready to defend you in case someone comes at you, because even if you're in the right, you're still in the wrong until proven you're not in the wrong. But if you don't have a securities offering, if you just want to talk about how much you love real estate, how great these property deals that you're going on, how much you're looking forward to doing your next deal, yada, 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 and then you can talk about with people, hey, we just did this syndication last week, last month. We can have you lined up to do the next one and be a part of our next, round that we do. So you've built this relationship. Now you still have to go through all of these checks beforehand, so accredited, non-accredited, run them all through the forms, figure out their level of sophistication, knowledge, and expertise in the field, and then do those whole things if that's something you want to do, or offhand it to myself, whatever. I'm happy to do it. And then from there, once you have your 1,000 people, go do it. The reason I say 1,000 is I like to keep the general rule of if you about 10% of everyone who says they'll commit in a soft commit is going to commit. You can get 1,000 people who will say they're ready to commit until it's time to write the check. So I would run it as a 10% rule, me personally. And if you're overfilled, you're overfilled. Not a big deal. Just don't go over the non-accredited limit of 35. So I would, generally speaking, I would stick to as many accredited people as possible.
Is it better then just to stick with 506C so you don't have to worry about that?
That's subject for debate. I would, just because it gives me the power to generally solicit. The whole thing that I've come to find out about 506B being the most popular thing, is it popular? Sure, but why is it popular? Look at who controls those and look at who owns those. It's a bunch of friends who all used to work together or whatnot. They've got 20, 30 years in the business and industry, have met a bunch of people, have great relationships with people, yada, 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 and then they all come together. So they've built these relationships over years. They know everything about each other. Then they go out and do it. If you're just starting out, don't even have a fund. Just go talk, figure things out. Once you have a bunch of people, then go start a fund. And even then, if you want to start a 506B, great. Just expect yourself to pretty well be capped at that point. Moving forward.
That's probably why a lot of people do the podcast. I don't know if that's why they do podcasts, but they say it's a great way to meet people. And then you ask everybody that's a speaker to invite their group. And so now you're having that conversation.
Yeah, just check with your lawyer before you do that stuff. Figure out what they'll defend you on.
Is there an advantage to making your own non-for-profit corporation?
Taxes.
I mean, as far as,
If
looking
if
for
you're if
capital?
you wanna go give money away to people, if you wanna be a civil servant and donate, sure, go start a nonprofit.
No, I could be like an education company that sponsors seminars.
By all means, go ahead.
Any
That would
advantage
offset
to
some
that
of
as
your
far as getting
income.
capital? That's the question.
Do what?
If there's an advantage to doing that for getting capital, that's the question.
Like, you want to use a non-for-profit to shell money into your fund?
Potentially.
I highly recommend you seek legal advice as soon as possible. I would never do that. You have to look at what a non-for-profit is. If the proceeds of the non-for-profit are not going to what designation of the non-for-profit are for, good luck, you're gonna have one hell of a time in court.
I
So
would
I'll
guess,
tell you now,
Julie,
the answer is no.
that might be where you would do the non-for-profit just for educational purposes to educate and then make them aware of what's out there. And if they choose to invest at that time, that might be different. Is that what you mean?
Possibly.
And then it wouldn't go through the not-for-profit.
Yeah, I would not use your non-for-profit to shell money into your fund, or you're gonna go to jail.
Okay. Just worked with a couple of non-for-profits, and whatever profits were there at the end of the year pretty much went to the owners or the company.
Right,
owners.
that's totally fine. If you want, so that's actually that's on my list of unethical ways to become a millionaire. Is go start a non-for-profit and raise a crap ton of money and pay yourself a really nice salary.
Yeah.
Because you're allowed to do that. Just a large chunk of the money has to go to whatever you're. So if you are a cancer research non-for-profit, a very large chunk of your money has to go to cancer research. I think it's 61, section 61 of IRS code. I believe someone can fact check me real quick on that or find it and put it in chat. So you can't just raise $20 million as a non-for-profit and pay yourself 20 million. A large chunk of that has to go to whatever your designation is going to be.
Yeah, I
And then
agree.
it all has to be reported.
Thank
So
you.
this is David. I have a question in reference to foundations. I know it's probably similar to a nonprofit, but I'm just curious on that part of it. What have you seen the foundations utilized and how they're structured for this purpose, I guess?
Like a charitable foundation?
Yeah, if you have a charity and maybe the funds go to this other foundation or whatever it is. I'm just curious because I'm hearing a lot of that, and I'm seeing some of those foundations. I'm just curious how they're set up, and collecting their fees and so forth, income.
Charities are a whole separate can of worms. I mean, like, you have very set guidelines for what you can and can't do within a charity. So the main thing is a very large percentage of the income that they receive, or donations rather, has to go towards whatever it is that they're designated to donate to. What they do with that extra money is totally up to them. That's going to be used, say, for keeping their main office together, paying themselves a salary. Funny enough, within a charity can actually invest in securities. That's not a problem at all. They're totally allowed to do that. It's just how much of the percentage they can do. As far as structuring, that's a whole other can of worms of structuring your charity to do what you want it to do. A lot longer conversation than we have this time, and you probably need an attorney for that.
Yeah, trust attorney.
So I wanted to ask Dylan, I know you touched on it briefly, but can you elaborate a little bit more on the type of discussions that we should be having, and what we should uncover in those discussions to qualify someone for a 506B before the offering is made?
Yeah, so you really just want to get down to what they know. So almost pretend, so like Cliff and you and I, if you and I were having a conversation about real estate, we would talk about things real estate. We'd be using, real estate acronyms and yada, 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 whatever it involves with around real estate. That's how our conversation is going to be geared toward, because you and I both have a baseline understanding of real estate. So just have that same conversation with them. It doesn't have to be something that's super tricky or complicated. Just probe, figure out what it is that they know. Hey, have you ever heard about real estate? What do you know about real estate? I myself, I'm thinking about investing in real estate. And it's going to be a natural dialogue. It doesn't have to be a deposition on them by any means. Just make it natural, make it flow, have a conversation with them about something you care about. But don't go over the board. You don't want to be sales pitchy by any means. And then, eventually you're going to want to figure out what their net worth is, what their income is. But by the time you've created this conversation and gotten to the point of even coming up with an idea to start the conversation with them of, hey, why don't we do real estate together? We're both learning about this together, even though you know all of it. You have to play the game, but they're now interested in it. Play the game. Then if you're like, oh, okay, would you want to invest? You want to go, in on me on a property? Yeah, sure, man. Sounds great. Okay, let's start figuring out how much, I can put towards it, and let's figure out how much you can put towards the property. Okay, well, in order to do that, what's your net worth? How much income do you make? And you share the same information back to them. Don't make it one-sided. And then you can start figuring these things out. And then once it comes time to doing it, I would, of course, have them fill out a form. I wouldn't just take their word on it. I would always have them fill out a form and sign it, certifying it. But I mean, that's just conversational. That's where a lot of that information, and you should be doing that with your investors anyway. If you're a small fund, if you have thousands of people, yeah, you're not gonna be able to talk to every single one of them. But if you're smaller, 100 people, maybe even up to 500, I mean, you should probably know every single one of your investors, front, back, sideways, upside down. You should know everything about them.
So Julie Phelan had a Julie Talks Money weekly show where people came on. She knows all those people. If she ever decided she wanted to do a security and get some real estate, she could actually call all those people because she's already has a relationship with them. Because it was a call in show, email, and all of that kind of thing. But that's one way to build your following so that you can talk to people that don't make the mark of accredited investor.
So Dylan, what would someone expect to pay if they wanted to set up a 506B or a 506C to raise capital?
That's gonna vary.
Okay.
Attorney to attorney. So if you want to go, there's more to it than just the legal entities, though. There's a lot more to that. You need, you're gonna need your legal side. You're most likely gonna need a compliance side. You're gonna need a fund administrator. And then there's tons of extra costs that you won't see coming, I promise. It just happens. I think all in on our 506C, I can pull, I don't want to take too much time looking for the file, but I think we've allotted $150,000 for the budget before we got it done.
Considerably higher than what I
it's
have.
not going to
I've
be
heard
that much.
25 to 35.
Right. We're doing a lot of extra stuff. The legal fees in and of themselves are going to be anywhere from 10 to 30K.
Okay.
Compliance after that, that's going to be monthly or yearly after that. Then you have fund administration, that's going to be monthly or yearly on top of that. So there's all these extra fees on top of legal that comes into the game. Legal paperwork itself, I'd budget 30. If you come in under budget, great. I wouldn't go over.
But the 150 just that covers everything that is connected to it.
Yeah, the 150 we have allotted for everything that we're doing. But we're also doing a lot and providing a lot of value. and we're paying for it for our investors, opposed to them having to pay for it themselves. So everyone who comes into our fund, if they want, they will never pay income tax or capital gains tax again. So the same service that you guys have heard me talk about before, we offer that to all of our investors if they come into our fund, and the fund pays for it for them.
Thank you, Dylan.
The caveat to that is, if you're going to do that, you're investing in our fund.
Thank
Okay.
you.
Let's get Angel in here. I want to
Angel.
make sure that we give her some time.
Yep, because we're at the top of the hour.
I thought that the SEC guidelines on accredited versus sophisticated was the same for all SEC offerings.
Should be.
Okay, so then accredited is anybody with $1 million of net worth minus the value of their personal home.
Mhm.
And then it's a single person at $200,000 a year. For the last 2 years or 3 years, the expectation that you'll have the same income for the next 2 or 3. If you're a couple, it's 300,000, or if you have one of those series licensures. And then sophisticated is just somebody that doesn't meet accreditation standards, but has some level of knowledge about the investment.
I wouldn't say some, it's a sophisticated knowledge.
No,
So
I'm
that-
telling you what it is. I've already done an offering,
Oh,
and that's for my
okay.
lawyer.
Okay, our lawyers disagree then. And the same, I mean, the study material that I went through to get my 65 said the same thing. It's teachers, lawyers, engineers.
Negative. I'm not accredited just because I'm an economist. I'm not sophisticated just because I'm an economist. My husband is not sophisticated just because he's an engineer. An engineer could have zero knowledge of real estate investing. That doesn't make him sophisticated.
Right, so there's other things that have to go into this. There's just certain licenses that would qualify as that. There's certain designations that would qualify under circumstances that do provide that.
Okay, well then that's super scary because I have some professors that are not accredited, but they are economists. And if they start investing in things, things are going to get ugly.
Angel, how many people do you know that are accredited that are complete idiots? There's tons of people with millions of dollars that are stupid. Same principle applies to sophistication. They can
Yep.
qualify. I've met very dumb CPAs. I've met very dumb lawyers.
Well, but you're
There's dumb people
covered at a
everywhere.
greater degree at sophistication. You're sophisticated, but the SEC is still watching out for your ass because
Right.
you can't afford to lose $100,000 the same way that an accredited person can.
It's still held to sophistication. You know, I don't necessarily agree with the SEC rules. That's just what they are. Just because you have $1 million net worth doesn't mean you're smart. Doesn't mean
No, but
you're
it means I can lose
well-educated.
$100,000 and recover. My sophisticated friend may lose $100,000 and be out of the game forever.
That's just the way the rules work. I don't know. That's how it goes. It's voting day. Go vote.
I voted early voting.
Get some new senators in there. Go talk to them about the SEC. Maybe they'll bring it up to them and change the rules.
Maybe. Seema has a question, and then we are going to stop recording.
No, I don't have a question. You may want to, may want to stop recording now. The SEC requirement is crap. This whole thing about is sophisticated or an accredited investor sophisticated, all people look at is that you have a high net worth. When I started doing all this stuff, yes, I had a hell of a lot of money, but zero knowledge, absolute zero knowledge. And now maybe I have 10% of knowledge, and I'm
I would say
learning.
more than that. You've come a long way, Seema.
Well,
Yeah.
you are kind, but you know, so that's all crap. And I learned that just like I don't pay. I have no respect for all these people who make the laws, then don't follow through, especially if you're a billionaire. I won't take names. And, so this whole sophisticated, I mean, I got my girls into things that should have been accredited investors, but, because they're my daughters and I make enough money. So all these rules are meant to be broken. Anyway, I just had to.
Look, I came on here to give some sort of information.
But yeah, it is good.
None of this is my fault.
No,
Not a
absolutely.
single bit
Absolutely.
is
It
my
is not.
fault.
When they make me the dictator, then I will change things. Till then.
Well, Dick, okay.
We said to bring your sense of humor.
You can wish and dream.
I
for
would
that,
like
but
to be
it's
under
not
SEMA's rule.
that'll never happen. I
So
promise.
Dylan, we did
Madam
ask you
Speaker,
to bring
Madam
your-
Speaker, I hereby nominate SEMA to be Queen of the Galaxy. Do I have a second?
Hey,
We a-
let me tell you,
remember-
let me tell
asked-
you, when the Prime Minister of England is now an Indian, Britishers of Indian origin, every Indian kid has been hassled by their parents that why have you not achieved something as high as becoming the president of the United States? Why are you just the CEO of $1 billion company? So,
Okay,
so
That's off subject.
no, I can become a dictator then,
Okay,
No,
hang on. We'll
not
get
in
us.
this country.
Hang on, Dylan. We love you. Brought your sense of humor with you. It was really great. It was a fun conversation. I think I learned a lot. Actually, I really did learn a lot, and I really thank you for the distinctions you made. It was very, very helpful. And I understand there are rules, and I'm in SEMA's box. My CPA calls me the crazy lady because if I don't like something, I try to figure out how to get around it. So, but I'm not going to jail, that I can promise you. So thank you very much, Dylan, for coming on, and I hope you come back again. Actually, Dylan will be back again. He'll be on next week for our tax panel. Sarah Waterman will be here, Kristen Berman will be here, and Gary Burns will be here. So we will see you all next week. Thank you.